Assalamualaikum, FIN542 News here. What is peso and what is Mexico Peso Crisis? Stay with me, your news anchor Mayrisha Addeline binti Fozilan for further information. Peso is a monetary unit that being used by several countries in America and Philippines. It originally from Spain. Peso means weight and the code is MXN. The peso was 15th most traded currency in world and third in America after United States dollar and Canadian dollar. On 1970, Mexico faced an oil crisis that led to severe cases of capital flight, inflation, and devaluation. Mexican peso crisis happened in December 1994. It was caused by devaluation of peso against United States. This crisis actually began when the currency was devalued from 13% to 15% and then resulting in currency crisis. To accelerate with the crisis, both domestic and international economic factors along with political force are needed. Furthermore, central bank also take an action on converting the short-term debt. The effect is known as tequila effect or tequila shock. Mexican peso crisis has decreased in foreign reserve and increase in debt. Lastly, self-fulfilling crisis is when the investors are uncertain about the debt by government. That's all from me. Next, we move to Juita on the topic of subprime crisis.
Thank you, Mayrisha, and you are with me for the subprime crisis. Subprime crisis was a multinational crisis which took place back in 2007 until 2010. It arises as there were too many mortgages being sold by banks to satisfy the demand in the secondary market. This crisis occurred as mortgage-backed securities which caused by hedge funds and banks, while insurance companies covered it by using the credit default swaps. Subprime crisis too had been provoked by subprime lending and housing speculations. Enormous drop had led to mortgage failures, foreclosures and housing-related securities devaluation. The effects of subprime crisis. The interest rates were affected when mortgage-backed securities took place, and Federal Reserve increased the federal fund rates and led to an increase in interest rates. Real estate industry in Mexico been affected by COVID-19. The projected number of housing loans will decrease by 9% in 2020 and home loans suffer at 12%, while households with enhanced credit status lost around 14.1%. For economy, rising house prices facilitate consumer spending and contribute to higher economic growth due to the effects of wealth. Sudden drop in house prices had negatively affected the economy. 4 types of subprime crisis. Fixed interest mortgage was given up to a 50-year term and it lowers the monthly payments for the borrowers, but they need to pay a higher interest rate. Adjustable rate mortgage is a loan with interest rate on the note regularly balanced on the basis of an index reflecting the cost to the lender of credit market borrowing. Interest-only mortgages charged its borrowers to pay interest only for the first few years of borrowing, and principal need to be paid within end terms or can choose to refinance the mortgage. Dignity mortgage is a new type of loan which the balance on mortgage is reduced if a borrower made payments on time and interest rate will be lowered to prime rate. Next, I now will describe more on the relationship between COVID-19 and the peso.
Thank you, Juita, Akmar. And now I will proceed with the relationship between the COVID-19 pandemic and the Mexican peso. According to the data that we obtained from the Pound Sterling Live website, Mexico's first COVID-19 cases are recorded on 28 February 2020. Before COVID-19 pandemic, Mexico are able to record their best currency rate of peso 18.5268 per USD dollar on 14 February 2020. And due to the COVID-19 pandemic, Mexico economy are hugely affected by it and continue recording depreciation in their currency value until the mid of year 2020. However, starting from the August 2020, Mexico are able to record a stable rate currency value with an steady increase until the end of the year. And now we are back to the effect on the COVID-19 to the Mexico economy. Due to the COVID-19, Mexico economy shrank by 70% on the second quarter of the year 2020, starting when the government imposing a lockdown. Next, there is an estimate of 1 million people, citizens of Mexico, that lost their job due to the pandemic. And the country continue recording fall in their GDP rate until the 18%, while the poverty rate of the country keep increasing. Tourism industry in Mexico has already fallen more than 60%, while 58% of the Amex company have to shut down their operation on April, while some of them are able to survive and starting back their operation starting from May and June. And now we will continue our news with the government reaction toward this issue. Mexico government decided to implement hiring freeze in which no government worker will be fired and the worker that is affected by the lockdown will continue to receive their salary until August. Next, high-ranking government workers are offering voluntary salary cut down up to 35% and no bonuses for them at the end of the year. Besides that, Mexico government also providing unemployment insurance for 3 months to the worker that hold mortgage with Infobenit. Government will also provide housing loans as much as 4 million credit of up to 1,100 USD dollar per credit to the small businesses and the worker for both sectors, in which including the formal and informal worker. Lastly, the government will also provide liquidity support through the development banks. And now I will let Hadi to cover more on the news.
Thank you, Aina. So now let's proceed to the effect of globalization to Mexico. On this year, Mexico's economy shrank by 8.8% as the pandemic struck Mexico, so oil production, financial transaction, tourism and others have ceased and aim to recover next year by 5.5%. Next, gross domestic product in Mexico fell in second quarter. This is because of primary activity declined by 2%, secondary activity plummeted 23.4%, and tertiary activity fell 15.1%. Remittances in Mexico are down to $981 million and could drop more than 31% between 2020 and 2021. This is due to the pandemic and lower oil prices. As for Mexico, they face another challenge when their remittances dropped dramatically in April as US locked down because of the COVID-19 pandemic, since they rely on the US for the vast majority of their remittances. Moving on to import and export. In June 2020, export and import dropped due to the downturn in the US economy, where much of the industrial process in the US is closely related to the output of Mexican manufacturing, especially intermediate product. This will rise production costs and decrease productivity due to the supply shock. Unemployment. Mexico lost almost 1 million jobs and could hit 1.5 million at the end of 2020, where 80% were permanent and the rest were temporary jobs. Most of the employment arises from companies associated with tourism. Last but not least, foreign direct investment (FDI) in Mexico increased by 4.00 USD billion on September 2020. Mexico placed second with foreign direct investment highest arrival, 5% behind Germany, which is 15%. From January to June 2020, Mexico recorded 18 million in FDI, 0.7% less than in the first half of the last year. That's all for me. Thank you for watching and have a nice day. I'm Mohamed for FIN542 News.